I have found the easiest pump signal ever for altcoins and Bitcoin. The signal is very rare. We haven't seen it for years, and it is blinking buy, buy, buy. That signal is quantitative easing, and in this video, we're going to break down why this is bullish for altcoins and why altcoins are about to pump. Quantitative easing, or QE, is also known as flooding the markets with cash by buying bonds from banks. Spin it any way you want, the markets will get flooded with cash. Now, essentially, quantitative easing is a tactic used by the Federal Reserve to stimulate the economy in times of crisis. It increases the money supply and lowers long-term interest rates. Now, this occurs when the Fed buys long-term securities to boost the economy. This will increase that money supply, which will then lower the long-term interest rates. When there are low interest rates, that will make it easier for banks to lend and for people to borrow, and that's what stimulates the economy. You're more likely to go out and buy that Dodge Charger if you're fresh out of boot camp. And the reason we're talking about this is they did it again. The United States Treasury just bought back another $10 billion of its own debt, matching the largest Treasury buyback in history. And that just happened a week ago. But if you look at the Fed balance sheet, you'll notice that the Fed balance sheet hasn't been increasing tens of billions of dollars. Because when quantitative easing hits, this balance sheet should increase. So what the heck is going on? Well, there's a slight distinction you might not be aware of. In-game macro has a wonderful breakdown here. I get that this isn't quantitative easing in the traditional sense. These buybacks aren't expanding the Federal Reserve's balance sheet, and they're not creating new reserves. But this doesn't mean that they're insignificant. These two back-to-back $10 billion Treasury buybacks, both maxed out, serve a similar purpose to quantitative easing, and they do this by injecting liquidity just through a different channel. They're using fiscal operations instead of monetary policy. Now this gets complicated, and it gets even more complicated, but I have a wonderful example to break this down. Someone actually asked in-game macro, bro, you gotta slow down. Can you explain non-QE liquidity as if I'm a fourth grader? Please and thank you, and I love this example. Imagine you're running a lemonade stand. When you run out of money to buy lemons, your mom, aka the Federal Reserve, gives you a bunch of cash to keep going. That is regular quantitative easing, but this is a little bit different. Now imagine instead of your mom handing you cash, your mom lets you borrow her credit card just for a little while so you can keep buying lemons until your own sales improve. That's non-QE liquidity. It still helps, it's just sneakier, and they promise it's not printing money, even though it sort of feels the same to your lemonade stand. But let's talk about this foolproof signal and what it means for altcoins. Now, we are still awaiting official quantitative easing. It does look like it's going to be around the corner. And one of the reasons I'm thinking that is the relative strength index on the Fed balance sheet. Before we got this giant spike by quantitative easing, we could see it kind of brewing on the RSI. Before we even get this inflection point where things turn around, you can see the RSI was curving. It was flat well before this point and started to creep to the upside. So now let's look at the current RSI structure. You can see we had a little bit of a dip, had a little brief aberration, but now you can see it is flattened out and this RSI has long been creeping to the upside. And now I want to share a date. Look at this point right here. This is when things spike. This is March 2nd, and the week before that, February 24th. So the end of February, beginning of March, quantitative easing took off like a rocket ship. Well, let's look at crypto prices in relation to this. This is the others chart on a log chart here, and so this is the crypto total market cap excluding the top 10 coins. Now remember those dates we were looking at, the end of February, beginning of March of 2020. Well, that's this period right here, and because this is a log chart, you can't even actually fathom how bullish this is. The total market cap for all altcoins outside of the top 10 went from 6 billion all the way to 245 billion in a very short amount of time. And if you go back to the Fed balance sheet, it looks like we're about to repeat some of these moves. And I want to show you one more thing on the regular chart. Now, when you go to the regular chart, remember, we're talking about this period right here. This is where things took off like a rocket ship. When you go to the regular chart, holy smokies, things really are then summed up into perspective. Holy smokies, things look even more bullish than I originally thought. And now I want to show you this market structure, and it looks like we have some pretty strong support here. This is the others market cap bouncing along this line. So we might see one slight pullback, but I'm expecting to create yet another higher high and then exceed where we were last cycle, which was almost $500 billion. So there's your foolproof altcoin signal. To me, quantitative easing is definitely going to be rocket fuel for your alt bags. I'm Deezy, and hopefully I'll see you with those stronger alt projects at the top.